If you were able to understand well part 3 of this lecture series, this episode 5 will be quite easy for you. In part 3, we were on the point of view of the seller. Now, we will be recording transactions from the perspective of the buyer or purchaser. Please keep in mind that buying or purchasing is an opposite transaction of selling. From that, we know that the account title purchases is the opposite of the account name sales. Likewise, purchase returns and allowances is the opposite of sales returns and allowances. And purchase discounts is the opposite of sales discounts. Therefore, if the normal balance or increased side of sales or sales revenue is credit, then the normal balance of purchases must be debit. If the normal balance of sales returns and allowances as well as sales discounts is debit, then the normal balance of purchase returns and allowances as well as purchase discounts must be credit. And again, kindly be reminded of the following to succeed in recording transactions. That being said, let's have this problem. Journalize the following transactions of Brown Enterprises, a wholesaler of cell phone accessories. From this sentence, we know that we are on the point of view of Brown Enterprises. We need to record the transactions of Brown Enterprises, not of any other business entity, not even of the owner of Brown Enterprises. Because remember, one of the important accounting assumptions known as business entity or accounting entity or economic entity or simply entity. The business enterprise is separate and distinct from the owner. We are on the viewpoint of Brown Enterprises, not of the owner, not of any other business entity. September 7. Purchase goods on account amounting to 40,000 pesos from Silver Company with term of 1/10 and over 20. Brown Enterprises purchase goods. The word goods here means merchandise inventory. Since Brown purchased merchandise inventory, its account title purchases increased. What is the normal balance or increased side of purchases? Debit. So debit purchases. For how much? It says here, purchase goods on account amounting to 40,000 pesos. So 40,000 must be the amount of the debit to purchases. Now, you may want to ask, shouldn't we debit the account name merchandise inventory? Because when Brown purchased or bought goods or merchandise, its asset merchandise inventory increased. Actually, you are correct in saying that Brown's merchandise inventory increased. But please remember this. There are two methods of accounting for inventories: periodic inventory system and perpetual inventory system. For this transaction, merchandise inventory must be debited when the perpetual inventory system is used. But under the periodic system, the account title purchases must be debited. Because the problem is silent as to whether the periodic or perpetual inventory system is used by the business, then the assumption is we must account for the inventories using the periodic system, because the periodic system is the more common method. By the way, for the differences between these two inventory systems, you may watch my video entitled Accounting for Inventories Part 1, Periodic and Perpetual Systems. Anyway, going back to this first transaction, so I hope this is clear. The debit must be to the account name purchases. not merchandise inventory. Okay? Because if the problem is silent, we have to use the periodic inventory system. At this point, let me remind you of what I mentioned in part 1 of this lecture series. We should only use the account title purchases as well as purchase returns and allowances, purchase discounts, sales, sales returns and allowances, sales discounts, freight in and freight out when the item concerns merchandise inventory, not any other asset. Hence, let's say here, Brown purchased furniture instead of goods or merchandise inventory. We must not debit purchases because furniture is not a merchandise inventory. Unless, of course, if the company is a merchandiser of furniture, meaning it regularly buys furniture for the purpose of selling. Because recall that the merchandise inventories of a merchandising business are the products which it normally buys in order to sell for profit. So again here, since what Brown purchased was goods or merchandise inventory, the debit is to the purchases account. But if the transaction instead states purchased furniture or purchased supplies, we must not use the account title purchases. Please take note of that. Now, what must be the credit here? Purchase goods on account. When you sell merchandise on account, you increase your asset accounts receivable, right? When you buy or purchase merchandise or goods on account, you increase your liability accounts payable. Brown Enterprises purchase goods or merchandise on account. Therefore, its accounts payable increased. And to increase, normal balance of liability, credit accounts payable for 40,000. But what if the words on account do not appear here? Let's say the transaction states purchase goods amounting to 40,000 pesos from Silver Company with term of 1/10 n/20. Must the credit still be to accounts payable or to cash already? Still, accounts payable must be the credit. Why? Because of this term, 1/10 n/20. The buyer would get a 1% discount if it pays within 10 days. If this were a purchase on cash basis, the seller won't offer the buyer a credit term like this, 1/10 n/20. So another very important thing you need to keep in mind. Once you see a credit term like this, even without the words on account, you must know the purchase or even sale is on account. To finish our journal entry, let's have a short explanation. To record purchase on account. September 8 now. Paid the freight bill on the purchase from Silver, 1,500 pesos. Remember the freight terms I discussed in part 2? FOB destination, FOB shipping point, freight prepaid, freight collect. Here in this transaction, there is no mention of any freight term. But because the transaction says that Brown paid the freight bill, then the assumption is Brown paid because it must really be the one to shoulder and pay for the freight charge. From the word paid, we know what item was affected. The cash, right? What happened to the cash of Brown when it paid? Decreased. To decrease, credit. Because cash is an asset, the increased side of which is debit. Therefore, to decrease cash, we must credit it. What must be the debit? Paid the freight bill on the purchase? Freight in or freight out? Freight in. Because remember, we are on the point of view of Brown. Brown was the purchaser or buyer. When Brown purchased or bought the merchandise inventory went in to Brown Enterprises. So freight must be freight in, not out. For 1,500. The amount also of the cash paid by Brown. Then, explanation. Let's move forward to the next. September 9. Purchased 25,000 pesos worth of goods from Salvacion Trading. Term 2/5 and over 20. Debit. Purchases. Because of the words purchased goods, meaning merchandise inventory. So we have to use the account title purchases. How much? 25,000. What must be the credit? Accounts payable? Why? Take note, the transaction does not say on account or on credit. Why accounts payable? Because of the term 2/5 and over 20. Remember what I told you just a while ago? When you have credit term like this, even without the words on account or on credit, automatic, the purchase or the sale is on account. So, credit, accounts payable, also for 25,000. To record purchase on account. Next, September 10. Returned 2,000 pesos worth of goods received from Salvacion due to breakage. From the words returned goods, this must be either a purchase return or a sales return, right? But which is which? Purchase return or sales return? Are we on the viewpoint of Brown or of Salvacion? Of Brown Enterprises. With regards to its relationship with Salvacion, who is Brown? The buyer or the seller? The buyer. Because it says here, returned 2,000 pesos worth of goods received from Salvacion due to breakage. Brown Enterprises returned the goods it had previously received from Salvacion because Brown had purchased those goods. Remember this transaction on September 9? So Brown was the buyer or the purchaser with regards to its relationship with Salvacion Trading. Therefore, on September 10, we must record an increase in purchase returns, not in sales returns. And what is the increased side or normal balance of purchase returns and allowances? Credit. So credit, purchase returns, and allowances for 2,000. How about the debit here? When Brown purchased on account, we increase its accounts payable, right? When the business returned part of what it had previously purchased on account, what happened to its accounts payable? It decreased. And how do we decrease accounts payable being a liability? Debit, because its normal balance is credit. So debit, accounts payable for 2,000. Explanation. To record return of goods previously purchased. September 17. Paid the amount owed to Silver Company. Again, from the word paid, cash decreased. To decrease, credit cash. Why did the business pay cash? Did Brown purchase goods from Silver on this date, September 17? No. So we must not debit purchases here. Paid the amount owed to Silver Company. From the word owed or owe, that means liability, right? Because when I say I owe you 500 pesos, that means I have a liability to you in the amount of 500 pesos. In short, Brown Enterprises paid Silver Company because it had a liability, an accounts payable to Silver Company, which, if you remember, happened on September 7. That's why we credited accounts payable then for 40,000. Was there any other transaction before the payment on September 17 which affected this 40,000 pesos accounts payable of Brown Enterprises to Silver Company? None. There is no other transaction where we debited or credited these accounts payable to Silver. Therefore, on September 17, Brown paid this entire accounts payable of 40,000. Because it says here, paid the amount owed, meaning the entire accounts payable balance of 40,000 to Silver Company. What do you think happened to Brown's accounts payable after this payment? It decreased. And to record the decrease, what must we do? Debit accounts payable for the entire amount of 40,000. How about the cash paid, which we must credit to cash here? Should it be 40,000 also? Remember what I told you in part 4 of this video series. Every time accounts receivable is collected or accounts payable is paid, you have to consider what? The credit term, if there is, to determine whether the buyer is entitled to a cash discount or not. What was the credit term offered by Silver to Brown? 1/10 and over 20. If the buyer, in this case Brown Enterprises, pays within 10 days from the date of purchase, it is entitled to a 1% discount. When did Brown make the purchase? September 7. When did Brown pay the full amount owed? September 17. Was that within the discount period of 10 days? Yes, because September 7 to September 17 is exactly 10 days. Is still within the discount period of 10 days. So, should the cash here be equal to 40,000 also? Of course not, because Brown was entitled to the 1% discount when it paid within the discount period on September 17. What kind of discount is that from Brown's perspective? Purchase discount, because Brown, with regards to its transactions with Silver, was the buyer or purchaser. And how do we increase Brown's purchase discounts? By crediting it, because the normal balance of purchase discounts is credit. How much was the discount? 40,000 times 1% or 0.01 in decimal equals 400. How about the credit to cash here? 40,000 times 99% or 0.99 equals 39,600. How did we get 0.99? 100% minus the cash discount of 1% equals 99%. 99% in terms of decimal is 0.99. Of course, another way to compute for this 39,600 is simply by deducting 400 from 40,000, because the total debit must equal the total credit. However, my advice to you is get the amount of cash by multiplying 40,000 by 0.99 to get 39,600, and then check if your total debit is equal to your total credit. That way, just in case you wrote the wrong figure for the discount here, you will be able to notice your mistake and consequently correct it. Let's say here, instead of writing 400, you accidentally omitted 10. So you just wrote 40. If you will compute the cash by simply subtracting 40 from 40,000 and then writing the difference of 39,960 here, you will not be able to realize your mistake because your total credit would then still be equal to your total debit, even if your two figures here are wrong. But if you multiply 40,000 by 0.99, you will get the correct credit to cash of 39,600. And then if you add 39,600 to the wrong figure of 40 here, you will realize that your total credit is not equal to your total debit of 40,000. That will then prompt you to double check your figures and may cause you to notice that the 40 here is wrong and eventually enable you to correct it by maybe saying, oh, 1% of 40,000 is not 40 but 400. So again, my advice is compute for the cash by multiplying 40,000 by 0.99 to get 39,600, and then check if your total debit is equal to your total credit. Explanation now. To record full payment of account net of discount. September 29. Paid in full the amount due to salvation. Once more, from the word paid, cash decreased. To record the decrease in cash, credit cash. But how much was the cash paid? The amount is not stated here. It simply says, paid in full the amount due to salvation. Another question is, why did Brown pay cash to salvation? Did Brown make a purchase on this date, September 29? No. The transaction does not say that. So we cannot debit purchases here. Recall that we have already encountered this salvation before this transaction on September 29. Prior to or before September 29, Brown Enterprises had previous transactions with salvation. Remember? And to be able to properly record this September 29 transaction, we need to go back to those previous transactions. The first one was on September 9 when we credited accounts payable for 25,000. And then there was another one on September 10 when we debited accounts payable for 2,000. After those two transactions, how much was the accounts payable balance of Brown Enterprises to Salvation? 23,000. That is 25,000 credit minus 2,000 debit to accounts payable equals 23,000 balance of the accounts payable before payment to Salvation on September 29. When that accounts payable of 23,000 was paid in full on September 29, what happened to the accounts payable of Brown to Salvation? It decreased by 23,000, of course. And to record the decrease, what must be done? Debit accounts payable for 23,000. Was the payment by Brown within the discount period? What's the term? 2/5 and over 20. What was the date of purchase? September 9. From September 9, count 5 days. the discount period. September 14 was the end of the credit period, right? Was Brown able to pay on or before September 14? No, because Brown paid only on September 29. That means we must not record a purchase discount here. That also means the amount paid by Brown and the amount of credit to cash here must be this entire 23,000 worth of accounts payable. Finally, the explanation. To record full payment of account. Thanks again for watching.